So there's been a lot of renewed attention of this topic, with the emergence of new technologies like Gen AI and the changing rate environment kind of putting pressure on traditional revenue models for banks. But obviously, as you all know here, this agenda of digital transformation has been a topic before the emergence of Gen AI and should be well underway. But banks often have this reputation of being very slow-moving and slow to adopt these new trends and technologies. So do you think that's a fair description? We've got two kind of fintech representatives here, so I guess maybe, Pierre, you can give us the broad view and represent the traditional banks as well.
Thanks, Akil. Does this work? The microphone's working? Great. I think the banks are looking at it. They are more broadly, there's been a large focus on data. I think we heard in the earlier speeches that there was a focus around better understanding of consumer data in the retail and commercial space. And we're seeing that pervasive across the patch, that most of the banks are engaging in looking at AI as an enabler and a tool. I'll talk a little bit about like Gen AI, but beyond Gen AI, looking at transactional information in a more causal sense. So the real hot buzz term right now is causal AI, really understanding how customers are interacting with their transactional data and what inferences can be made about spend patterns and things that they're doing next. So I think the banks are progressing in this direction from saying, how do we move AI into a more under the hood, but very present in everything that's going on in customers' everyday financial life?
Mm-hmm. And Francesca, I know you work for quite a fast-moving now bank. Do you think banks in general are slow to adopt these trends, and how do you think about it at Revolut?
So I think, well, it's not, I mean, Gen AI is a big development. I think it's not completely new, right? So it has been going on for many, many years, but clearly it has surfaced to kind of the public more recently. I think it's clearly at Revolut, we've always been working with AI and more specifically with machine learning in the last few years. So in a way, it's been an important development, but not a game changer, because we are always trying to stay on top of innovation and be a kind of one or two step ahead. At the same time, it's clear that what's possible today is incredible compared to what was possible before. We do, and I think there are probably 2 or 3 areas of big application but I do think it's still early stage. So one is definitely customer interactions. Second is controls, fraud detection is very important for us. And thirdly, I would say eventually there will be cost efficiency, which I don't think they're still there. This is a slow-moving process. Of all of these, I think customer interaction is where I do see a lot of potential, and because it's one of those moments in time, actually in history, where not only we have a technological change that is enabling new possibilities, but we have consumers that are ready to embrace them. That's not true all the time. You can have technology changes and then it's too early or too late. So, and what we see today is that consumers are ready for instant gratification in a way, real-time data assessment, real-time insights, slick UX as well. So all of these, Gen AI can enable that today. So we're moving towards what we, at Revolut, for example, we are already using AI for a lot of a big portion of our customer interactions. There's a chat box, and we're looking to launch a personal assistant driven by AI later on, which will allow people to get really personalized advice in a way, based on their data, on their financial needs and so on, which is a game changer. So personalization will be quite a big trend going forward in financial services.
But I think I'll take a slightly longer term perspective here. I think the question, when a lot of people are talking about Gen AI today, that's been, let's say, been around for a year and a half, 2 years. But if you look at predictive AI, neural networks and so on, the math for that has existed for more than 50 years. The computing power for that has existed probably for about 25 years. And yet, you see most of mainstream banks, particularly in the UK, still really struggling to use it. For simple things, I would suggest, like credit decisioning, income verification, and so on. So I think the accusation that banks are slow, that's probably true. And I think that's, in some senses, that is what creates the opportunity for people like Zopa and Revolut. I mean, 10 years ago when it was the first time I was doing loans in the UK. I tried to say, what do customers want when they are looking for a loan? They want to be approved. They want to know whether they'll be approved or not, and what the monthly payment would be. And I said, okay, how long does it take for a bank to tell that to the customers? And 10 years ago, that was about 3 days. So we said, oh, how can we make that instant? And in about 8 years ago, we were making that instant. I think banks are just about getting there today. So I think there is a lot more faster we can move, and I think Gen AI is just the next step in that. And again, I would think and I would posit that banks would be slow.
And where do you think rolling out Gen AI can have the most impact if you had to compare between creating cost efficiencies and operational efficiencies and fundamentally transforming the relationship with customers? Yeah, where do you see the biggest impact?
Well, I don't think the two are mutually exclusive, by the way. I think there's a home run scenario where you can get both, right? Which is getting AI to drive a much more efficient back office in terms of handling credit decisioning, risk management, fraud. But at the same time, by virtue of having the ability to work with customer transaction information, get an understanding of behavioral patterns and inferences about how customers spend their money and where they'll be spending next and what they have spent on in the 5 years. So if you get this combination of driving AI through the efficiency game of understanding how to make operations a lot more leaner, you could also get to this point where the customers are engaging. It's very much where Francesca said things are going, which is engaging with these agents in a way that it's based on patterns and understanding of their behavioral transactional information is where the banks should be going. And I think a lot of banks are going to start to look at that relatively soon.
And who do you think, sorry, is best placed for that between the fintechs and the big incumbents?
Both. I mean, you'd have to look at it two ways, right? There's the ability to have large data sets and years of financial information and transactions. And then there's also the ability that the fintechs or the neobanks have the ability in these new architectures that are very much more open to getting multiple and different data sets from different sources and be able to integrate them a lot faster than some of the banks who have these large legacy architectures. So there's a balance of the two, but I think a lot has to do with operating model, the ability for the organization to understand how to leverage and use insight and transmit that into customer interactions. Regardless of size, both are easily achievable if you apply the operating model and the brain power to do so.
Yeah, I mean, I would agree inevitably on the second part. I think most fundamentally in terms of the comparison, right? So a lot of these innovations are tech-driven, AI, but using digital data, contextualize information, they rely on the ability to have an infrastructure that is digital and clean in a way, in terms of really the data set. And I think that's a key enabler. And typically, in a lot of the more incumbent banks that have been growing through a lot of aggregations on, that infrastructure is typically not there, and the ability to use and source and iterate. So some of the newest players, including us, but in fact, he had, by design, built an infrastructure and architecture that enables that. So automatically, you have digital data already ready to be used. So that is a massive accelerator to be able to embrace innovation without having to do remediation first. So that's what I noticed. I spent part of my life, a big part, in banking, traditional banking. So that was one of the biggest roadblocks. Is now, the ability to embrace the technology. Just the work that needs to be done to even be able to use it is a lot. In terms of the impact, yeah, I do think the customer experience, the customer interactions would benefit a lot, but I do fully agree. It goes hand in hand with the operational efficiency, so it won't be a trade-off in a way. I do think that there's a third dimension, but kind of related to this, where we do see a lot of impact now, which is, let's call it about the control environment. We can think about fraud detection, but we can think about automatizing processes. What that does, reduces a lot the operational risk and human error, and that's a massive shift and really positive for the industry, which will have very positive effect for customer, positive effect for efficiency, but also positive effect in terms of the overall robustness of banks and financial institutions.
And how do regulators feel about that? Do you know about?
Well, I must say, maybe I'm biased because we are in the UK. In the UK, I'm seeing clearly AI is a very new topic, and I think it's clear that across the world, all regulators in the world are now thinking, what do we do with this? How do we regulate it or not regulate it in general? In the UK, both the PRA and the FCA has given very clear signals that they are really looking to wanting to support innovation in AI. I think there is a consortium being set up by the Bank of England actually to explore that. So I think regulators are generally favorable, but they do need to, they're trying to understand now what are the risks, of course, right? That's what a regulator should be doing.
And I'll take the regulatory question first and then go back to your original question. From a regulatory standpoint, I think it's incredibly important, and I think the UK seems to be minded that way, that we're regulating outcomes, not means. Right? Ultimately, what matters is what is the outcome that we're delivering to our customers, be that in terms of the appropriateness of the product that we're delivering, the quality of service, and the protection of their data. Right? So if you're achieving on all those three things, whether I have got millions of mechanical turks sitting behind or a wonderful transformer-based AI model, that should not matter, because that's about how we are achieving it. And thus, I would hope that the UK continues to focus on customer outcomes and not on how we are achieving it, and leave the banks and the technology companies to innovate. Because when you start regulating mechanisms, technology moves much faster than regulators can, and thus them focusing on outcomes would be the best way. And that's the way we think about risk management as well, is that when we replace a human activity with AI, the way we are regulating it is saying, are we achieving the same outcomes that the human was able to achieve, right? And that's the way we think about it. Coming back to your question around whether it's going to be operational efficiency or kind of customer facing things that will change, I agree with what has been said in terms of it's both, and it's going to be game changing on both. But what really excites me is on the customer side. I mean, I'm old enough to remember way back into 2008 when the iPhone was first invented, and us thinking that actually doing banking on a little square thing where you're kind of pressing buttons is actually unnatural. We've all now been trained to do it in a way that has become intuitive to us. But there's a generation of youth growing behind us who probably will find it unnatural. And I do feel, I think it was said earlier in a panel here as well, that Gen AI offers us an opportunity to actually move beyond the mobile app and bring back some of the humanity through AI, to be clear, but bring back some of the humanity in that interaction where we can have a more richness of interaction with people, where we can go back to actually voice or written instruction to be able to interact with our customers. And I think that will bring back a lot more warmth back into banking, which is really exciting. And that's what we are focusing on, is how do we effectively replace the app, and what does the post-app world look like, particularly using Gen AI. The second thing, which I think is what I think you were talking about earlier, which is the exciting thing, is the personal financial assistant, right? So I think, again, earlier here, I think it was the Queen of Netherlands?
Maxima.
Yes. She was talking about how 25% of people don't have, are right on the boundary, another 25% are just lack resilience. And they do need regular alerting, regular almost guardrails to help them build that resilience. Almost a personal human advisor, right? And the economics of banking will never allow for a personal human advisor, but the economics of AI does do that, right? So I think it does present an opportunity to really build a financial system that can actually work in the longer term for the improvement of financial services, better financial inclusion, and better financial resilience. I think that's the bigger game changer. That's the price to go after. And that's what we are trying to get to.
And could you all break down for me what that actually will look like for consumers? Because everyone's experimenting with consumer-facing products, but which needs is it actually going to meet for consumers that aren't being met now, for instance?
So I was going to double-click on that, Jaidev, because you talked about outcome, but one of the areas in banking that I've seen we're struggling with is transparency of outcome, right? Which is, I've been involved with individuals who've signed up either or tried to sign up for a bank account or tried to get a loan or trying to get credit, and there's very little understanding about how the models are working for them, as opposed to, in their mind, they could be working against them or for no reason that they don't understand. So I'm imagining a world where there's sort of a glass pipe around decisioning and credit models and risk assessment. And that's glass pipe, and you heard me talk a little bit about it before, which was this causal AI capability, which was it understands you and what you do and your transactions. It understands where you've traveled, how many times you've bought at Boots, the times you've taken the tube. All of that shows up in your credit card data. All of that is shared with open banking. So the point should be, are these decisions being made on knowing me, or are they being made on a model that exists in a black box, right? And I'm hoping there's a world where AI can help us get to a more transparent, inclusive, and very much relevant banking model for individuals. And that is where I think, if you talked about where Francesca was going with some of these AI tools, that's where we should get to. And I'm hoping those models bring it to life a little bit.
Yeah, fully agree. I think maybe to double click and you say, break it down. Now, first of all, it's difficult because everybody, is a future a little bit. But if you think of what changes, what's the art of the possible, right? And I think beside the transparency is, for me, it's 2 or 3 things. So one is the ability, so first of all is interface. You could really move beyond the app. And I completely agree to that. But that's not just for banking, right? Right now, if we have a certain needs, I mean, this is more stepping out from banking, right? Right now, we all have different apps on our phone, and if we need to grocery shop, we do something. If we go banking, in reality, in the future, you could have a super agent that actually you just talk to. I mean, this is really the future, okay? But you can talk to, and he will just kind of link to all the needs you need, right? So, but in that super agent, the financial services, you can have the same type of interface. But then what changes is that you have 2 or 3 things are different. One, you have hyper-tailorization to your needs, because you'll have access to all your data, all your behaviors, all your spending patterns, all your credit needs, and will be able to give you advice real time on what you and only you need. So hyper-tailorization is really important. The second one is kind of smart decisioning. Let me put it this way. So right now, as a customer of a bank or a financial service institution, we think what we need and we kind of ask. You could get to a world where this thinking is actually done by your assistant and actually proposing the things to do. They're already factoring in all your data as well. And then it's conceptualized, which is at the right moment. So in the moment, I don't know, your bank account drops below, is about to drop below a certain level, and so you could have, this is detected automatically, and there's a proactive proposal to say maybe you should get a loan, or you should reduce, don't go out for dinner tonight, something like this, right? So these 3 things together create a little bit of a super agent that can help decision making, and because it's leveraged, it's powered by technology, is cost efficient. That's a big, big, big thing, because you could do this today if you had a dedicated agent for every single customer in every single bank. It's not sustainable. But once you can do it with a single platform, then it becomes sustainable. It becomes actually scalable. And that's why everybody can have access to it, not just if you don't need to have your private bank, right? And so it lowers the barriers to entry, and it increases access to financial services across the world. And also, you don't need to build a branch anymore. You can do it in any place. So I think it's sort of inclusivity and access. It can move things a lot.
When we think about customers, we think, lots of things change, their expectations change, their behaviors change. But fundamentally, what they want from financial services is 2 things, ease and value, right? So value, I'll start with value. Value in terms of just more money in their pocket, which is where all the operational efficiency can help. And value in terms of time saved, because all of us have an issue with time. And I think what historically, particularly because the big banks have not always delivered on those, what a lot of us have done is effectively be multi-banked, right? So, I might have a Revolut spending card, a Zopa savings account, and a Zopa credit card, but my money still might be coming into a high street bank. And this is where and that has driven a lot of cognitive load for an individual today to manage. And some of us do it better than others, but that cognitive load is still there for all of us. This is where I think AI can definitively simplify, is that if you have to continue to be multi-banked to get the best value, I think GenAI can definitively make it a lot simpler in terms of managing that cognitive load for yourself. And actually, again, this will depend a little bit on how much the regulators and the industry is willing to take risk, actually providing some help and guidance, maybe not advice, as that's a bad word in the UK, but help and guidance for you to make those decisions. I think that reduction in cognitive load and better engagement financial services is probably the biggest benefit that we could deliver to our customers.
And I was going to ask about that because it feels to me like everyone's experimenting with these tools in-house, but it feels like people are a bit scared about rolling them out. And maybe there's the risk of, no one's quite sure how the regulator feels. When do you think we'll see people actually go for it and launch these tools? I mean, you've said next year at Revolut, right? But
well, I haven't committed to a timeline. I would never do that.
But Pierre, when do you think we'll see it across the industry?
Yeah, look, I've had a lot of conversations. I think we're getting used to how these agents are working, and I think within a 12 to 24 month window, you could start to see the application of these agents starting to get a little bit more attuned to customer transactions and the way customers interact. I think regulation will play a big part in bringing the regulator along with that. But at the same time, there's some very simple things. I was talking with Jaidev before is, why can't I have an agent that's scanning easy access savings rates for me in the background, right? So if one of the rates change down to 4.27, and I see there's an easy access rate on Zopa that's 4.35, could it not just let me know about it, not even move my money, just tell me? Or there's a great fixed rate savings or a cash ISA. So I think there's simplistic things like that that can completely transform people's financial wellness, that are simple applications of these technologies in a way that keeps the boundaries with regulation, but at the same time really focuses on, I'm very big on where Maximo was going, is there isn't a loss of care and EQ from making people more financially fit. I mean, all of us have an Apple Watch. We have more information about our steps than we do about our money and how it's performing. So we can bridge that gap, I think, without a lot of effort. And I think the movement towards that is being led by these guys here to really drive the market in that direction.
I would be very surprised if we're sitting this year, if you're sitting next time this year, next year this time, if there aren't at least one or two of these out there. Maybe it's the two of us, I don't know. But I would be surprised if, that we haven't that. And I think there are two things that if you think of the real challenges of putting this out there, I would say it's less about regulatory concern. I think one is really understanding the technology and making sure we can bound it. And the thing about hallucinations and made-up facts and all of that stuff, everybody understands it. And of course, you don't want a banking agent to be making up stuff, right? So you want it to. So I think most of the banks who are working with it are trying to figure out how do you bound that and make sure that the answers are very much rooted in reality. The second actually was how fast the technology has moved on. I do think that OpenAI is, I think it's OpenAI 4, which really transforms the way voice works, because earlier it was voice to transcript, and then transcript back to voice, which means the latency was too long, and actually if you actually had to talk to it. And I think OpenAI 4 changed that. And I think that was a big enabler in my mind. So I would expect sometime next year for these to come into market.
And with hallucinations and the risk of errors, what is the acceptable? Have banks figured out what the acceptable level of risk is? I mean, do you want zero hallucination?
I think in banking it has to be zero. So that's the point, right? So you need to take baby steps. So you do need to experiment and pilot, and otherwise you never learn. But at the same time, you need to keep a very, very high bar in terms of what's the accepted level, because there's too much at stake, and that's why maybe it will take a little bit longer. At the same time, I would say the following: this time, this kind of innovation is moving very, very fast. Even the fact that OpenAI release a new model almost every 3 months, every 6 months. It used to be it would take like 2 years for a new release of a new innovation, even in software space. Now it's kind of more exponential. So in a way, the development goes very fast, so it will help. At the same time, I think in financial services, in banking, the adoption of the adoption will be quick, but the full rollout might be a little bit slower and by design, right? We need to be very, very careful.
I mean, I would. I never thought I'd be this side of on a risk-taking from Revolut, but I don't think we should be aiming for zero, to be honest, because I do think that will hold back the future and actually will be not beneficial for public good. The way we are thinking about it is that a lot of these things happen today at human call centers, right? And no matter how hard we try, you're never going to get 100% perfection from 500 to 1,000 agents who are kind of talking to your customers. And those who have run call centers, and I've had the experience of doing it, you usually are expecting 98, 99% accuracy, depending on the thing you're talking about, right? So where you're improving those, where we are actually replacing those human beings, I think there are well-accepted tolerance levels within regulation and that the regulators expect. If you're improving upon that, and of course, the bank takes responsibility for the one that it fails on, which is how it works today as well. I think that would be a far more achievable standard that we, of course, if we make a mistake, we are accountable, but we are improving on today's outcomes. That has to be the mindset, I think, if you really want kind of fast customer adoption, but also all the benefits that this has to provide in terms of a more productive banking sector, but also a banking sector that can take better care of its customers, then we will need to take a bit of risk.
Yeah, I often look at the Gen AI component as a narrow slice of what banking intelligence is. I'm where Francesca was going. I think there's an opportunity to democratize the kind of banking capabilities or banking knowledge in ways where you can apply this intelligence in data to give customers that better outcome that I talked about. So I kind of make sure that we stratify this intelligence discussion, not just around Gen AI, which will have that engagement back and forth, but there's actually times when I don't need the engagement. I need prompts, events, recommendations. I need it to understand me better. So I think if we can get to that type of discussion where it's a palette of intelligence that gets delivered to users or customers, I think that's where the model's going to be going in the future, as opposed to just down one path.
And where are the banks in that journey, from your experience speaking with them?
The argument is AI has been around for a while, or some level of applied intelligence or machine learning has been around in the banks for a while, right? So it's not new. There's this conversational aspect that has been very attractive to many people to say, wouldn't it be great if I can talk with my bank? But I actually just want my bank to know me, right? We want our banks to understand what makes us us, what are our goals, what are our ambitions, where we want to invest, who we want to invest with, how we want that investment to progress. So I think that's where the market could get to really get the best out of these customer interactions.
And I think that's happening. So for example, if I had to give an example of Zopa, we do our credit decision based on gradient boosted models, fairly complicated. I have no idea what happens in there, but we are incredibly focused on the outcomes, and the good outcomes are delivered. But the way we have simplified it for our customers is something very simple. We call it the borrowing power. It's a tool that you can get on your app. It gives you a score between 1 and 10. It tells you if you're a 10, what do you get, versus if you're 5, what do you get, and if you're below 5, you don't get anything. And it also tells you the 3 most impactful actions you can take to improve your score. Right, so that is effectively saying, yeah, there's a bunch of complexity happening here, but if for you it might be keep your credit card utilization below 35%, and that'll give you another point in your score, and that means you'll be eligible for these products or eligible for that rate, and so on. So I think it's simplifying that to, which again, that's just another AI model that is deciphering this other AI model and then kind of giving you the answer that based on your circumstances, this is what we want. And I think that's probably what you're talking about in terms of getting to know you and giving you something that is specific for you.
Thanks. I think we're running out of time, but if there is maybe one question we can take, do you want to go? Thanks.
Hello, thank you so much for the discussion. I have a question to Pierre, perhaps, and the broader group as well. So what about the vulnerable customers? Because essentially it's around thinking about the customers, building the trust, but we see a lot of fraud cases. We saw after COVID in particular, so many vulnerable customers. How do you see this use case and the digital transformation supporting it at scale?
Well, if you think about digital in its own right, has opened up the ability for customers at all segments of banking to have access to banking services, either from e-money wallets to simple bank accounts. So the ability to actually transact and the ability to be financially included in society is, I think, a big normalizer that has come across from digital. Now, the question is how do we help vulnerable customers? Well, back to understanding their data and how they transact and where we can help them, right? How do we understand how we could provide them any type of financial assistance and support by virtue of understanding the income that's coming into the account, their expenditures. So a little bit back to understanding these models, right? What type of microcredit could be apportioned or micro savings where we can help. But that all comes back to where I was going, which is we have to understand our customers better. They're not translated into a set of products. They are individuals who perform transactions. And the more we can get to know that a little bit better, I think it'll help out a lot.
I think machines would be far more capable of both predicting vulnerability and identifying vulnerability when you have millions of customers, right? So I think used right can be an incredibly good tool to both identifying where it has happened and thus hopefully giving them better, but more importantly, predicting that this might happen and trying to stop it. So I do feel that this is the best thing. Sorry.
No, go ahead.
Yeah.
No, Mr. I fully agree. So I'm just saying we need to go back to basic. I think vulnerable customers are customers with the specific circumstances in terms of the way they need to interact or the way their financial situation. And I think that's why there's a massive opportunity, because that's exactly what AI and machine learning allows to do. Better detection, but then better tailoring of the services to the specific circumstances. So it's a game, it actually can bring back personalization to a more digital experience, which is very difficult to do otherwise. So I think it could be just an additional empowerment for that.
I guess my question, just to finish, do you see anyone doing this at scale?
Doing this at scale in terms of using AI, not yet. Not yet. I think these all things are moving. I think they all, even definition of vulnerable customers and detection is kind of evolving, but also AI, the adoption of AI is also kind of early stage, and clearly there's still a lot of work to do. That would be my 2 cents, but I don't know. Yeah.
Thanks. I'm afraid that's all we have time for, but thanks very much for listening and for coming here and for this great discussion. Thanks.